well in the green, but stocks and sectors, they're going to be in focus. And to help us out with how he's positioned with regard to his portfolio, we have with us in the studio Balaji V Narayanan, the director at NAFA Asset Managers, who joins us in the studio. Hi Balaji, welcome to Bombay and thanks a lot for coming down to the studio. Well, you all manage an AUM, I think, of little over 500 crores or thereabouts, and your performance has been quite good. But at current reckoning, how are you all positioned, with regard to your portfolio? The street seems to be very, very bullish on a couple of themes like banking. So how are you all playing that? And what's the call on PSUs now?
Thanks, Nigel, for having me on your show. It's a pleasure to be here to making my TV debut. Current positioning is we're not extremely bearish in the markets. We are still able to find a lot of value, especially in the mid cap and the small cap space. So currently we have cash levels of about 8-10%. And as far as financials are concerned, we continue to be underweight on financials, and we've been underweight on financials for the last 2 to 2.5 years, and I think that is going to continue for some more time. And
the PSUs?
PSUs, we are zero on PSUs actually.
Oh.
So yeah.
You have an interesting fund, the NAFA Emerging Blue Chip Fund, but majority of your holdings is within the mid cap and the small cap space. I think around 90%, if I'm not mistaken. Do you think that now it's probably time to sort of rejig the portfolio, considering the kind of gains that we've seen in the mid cap specific stocks?
So it's more like a self-fulfilling prophecy. Just because mid and small have gone up, therefore you go to large. That seems to be like a consensus thing that's playing out Ekta. But what's happening is that if you look at the constants of Nifty, it's painting a little worrying picture, right? So the current blue chips, the ownership is very, very less. But what are the actual blue chips in India? So you have Apple, you have Amazon, you have Alphabet, you have companies like Meta, which has a 25,000 crore turnover. Apple will touch 70,000 crore turnover this year. I mean, these are all numbers that are greater than Cipla, Sun Pharma, Bajaj Auto, Hero, and so on and so forth. The real growth is on the large caps is happening outside of the Nifty, and the actual growth in the mid and small is happening within the market. Whereas in the early 2000s, this scenario was complete reverse. So you could be in the top 30-40 names and make a lot of money, and the mid and small were untouchable because of lack of corporate governance, a lot of unorganized space, and now it's the complete reverse, right? So mid and small, the corporate governance has improved. More and more sectors are getting listed in the mid and small space. So the opportunities are more over there, and the real blue chips are growing outside of Nifty. So that is a problem. So two-wheeler penetration in early 2000 and two-wheeler penetration now is very different. Four-wheeler penetration in urban India in early 2000 and four-wheeler penetration now is very different. But in the Nifty, you have the same stocks, but the large cap growth is coming outside Nifty. That is a problem.
So a bit of a reverse in comparison to what we saw in early 2000. The bulk of the growth was coming in, from the Nifty
large
constituents.
Yes.
Let's talk about a couple of themes, and Castrol is a stock that actually went to sleep for many years. It was actually an underperformer, but that's come back into play, and that's something that you'll have in the portfolio. So I want you to run us through that. And the other one, I think, is Heritage Foods. There was that political tailwind that played out, but how much of the good news is in the price on both these two names?
So Nigel, in terms of Castrol, right, so we have it in the portfolio, and our thought process behind Castrol was not actually the Castrol India numbers. I mean, we all know it's a very cash-rich, zero-debt MNC and stuff like that. But we were tracking Hertz. Hertz is a global global car renting company which is listed with a $1 billion market cap. In 2021, Hertz came and announced that they're going to move entirely into electric vehicles. That's when Tesla actually hit a $1 trillion market cap.
Okay.
Within 24 months, Hertz came back and said that, we are giving up 30% of our EV fleet within 24 months. So that's like a 180-degree shift. So the reason is high maintenance. This is as per the company, right? So high maintenance costs. A EV car is 30% more heavy than an ICE car. Therefore, the tires wear out faster. And Tesla, the OEMs themselves were reducing the prices of their end products, which means the second-hand market for their cars were coming down. Therefore, we are switching it back to ICE. Yeah. So Castrol was weighed down by terminal value questions. If lock, stock, and barrel people move towards EV, what happens to lubricants and things like that. Similarly, if you look at, say, Ford and Mercedes, they have publicly gone ahead and said that they are actually scaling down on their EV plans. So this gave us the confidence that Castrol was trading at a 4-5% dividend yield then, throwing out a lot of cash as dividend. So it was like a heads I win, tails I don't lose much kind of a scenario. Secondly, Nigel, at that point in time, couple of MNCs actually came and sold their India stakes. Whirlpool, Timken, ZF. In the case of Castrol, this issue happened way back in 2016 when their parent British Petroleum sold the stake in 2016 itself. So the probability of further supply coming in Castrol was very limited from the parent side.
So parent holds how much now in Castrol?
51%.
So that's why, okay, got it.
So this gave us the confidence to get into Castrol. And also this emerging trends as an idea, it's a bit overrated, Nigel. So if you look at the worst performing ETF, Ekta, in the US, it's the lithium and battery tech ETF.
Oh.
If you look at the worst performing ETF second worst performing ETF is copper ETF. If you look at the price of all the plant-based meat stocks, they've all taken a huge beating.
Yeah.
People don't talk about blockchain anymore. So, these buzzwords, they have a shelf life of 18 to 24 months. And then, as a French writer said, the more things change, the more they remain the same. So Castrol was such an idea which we picked up in our...
So how much of the good news is in the price for Castrol?
So the company is becoming very aggressive now, right? They want to capture the lost market share from their competitors. Yeah. They have also hired Shah Rukh Khan as brand ambassador, you must be knowing that. And they are currently also EV ready. So they are, their EV cars are factory filled with Castrol liquids. Yeah. And the biggest adjacency, if it happens, is the data center opportunity. As of now, the revenues are zero. But their parent, British Petroleum, has spent a lot for the data center R&D. So those things can play out.
So, I just wanted to actually touch upon what you said. And that's my next question. Then how are you deciding which stocks to pick within the mid-cap and the small-cap space? Themes, I understand that you're probably going to veer away from themes. But within that entire portfolio, what is your recommendation, or how do you choose your mid-caps and small-caps? What is the time frame of investment? When do you think is a good time to pull out?
So we typically look for 16 to 20 quarters in terms of at least giving time for the management to perform. In terms of how we look at the companies, we typically look for companies which are present in product categories that are growing at 300 to 400 basis points above the nominal GDP growth of the country. So that can happen for two reasons. One, it's a cyclical reason. Sometimes it's a secular reason. Secular reason is when the consumer buying behavior for product and service change. So for example, furniture, right? So 25 years back, our grandparents actually involved a carpenter and made a very custom furniture, and work order was given, and then the products used to come after a couple of months. It used to be heavy and bulky, had a very long shelf life. That's how furniture was being bought. But now with women participation in the labor force also picking up significantly, there is paucity of time. People are very happy with people are very happy with factory-made, ready-made designs. And a lot of that furniture is made out of MDF, medium density fiberboard. So if you look at the industry data, your medium density fiberboard has the potential to grow above nominal GDP for a long period of time. Western economies are also pointing to that. So 80% of their furniture is made with MDF, whereas in India, 80% is still plywood. MDF is just starting to scratch the surface. So there is a long runway.
So how do you play it? MDF?
So Green Panel is the largest listed MDF manufacturer in India.
Okay.
By the end of this fiscal, they'll become the second largest in Asia.
Okay. All right. We're running a little short on time, Balaji, but I just wanted that one number. Heritage Food has run up considerably. But in comparison to its peers, how the valuation shaped up?
It's still trading at a discount to Dodla, and obviously the leader is Hudson. But they seem to be kind of increasing their value-added product mix quite significantly.
Okay. I'm just going to probe you on one more question. You mentioned you're not a big fan of themes. You don't have any PSUs in your portfolio as well. Can we tie the two together and say, are you a believer in the defense and the railway sort of themes which have been playing out?
Defense is a huge sector to kind of give a very blanket call about it. So things like MRO, maintenance, repairs, operations, these still have a lot of potential. But a lot of these defense companies, the narratives have far overtaken the numbers. So you could see some amount of time correction happening in these sectors.
Okay. All right, Balaji, appreciate you joining in and giving us your quick take. We look forward to chatting up with you in the time to come.
Pleasure. Thank you.
Well, for the time being, we'll slip into a short break. On the other side, we'll focus on JBM Auto. Remember, they won that big order just yesterday. Stay with us.